Sharad, one more report that caught our attention this morning is from Bank of America survey that's actually come in. It actually indicates that India has actually gone from fund managers' top Asia stock market pick to their least preferred in just the last 3 months amid what's happened as far as the tariff is concerned. That's as far as Bank of America Corp survey. In the most recent fund manager survey, Bank of America says that 30% have actually said that they're underweight on India, followed by 20% for Thailand and 10% for Malaysia. Japan has actually fared as the best pick within the Asia markets. China has taken the number 2 spot, and a total of 99 panelists that they actually spoke to with $183 billion of assets responded to the surveys, regional questions there. Now, this is a sharp reversal for sure from May's survey of Bank of America that actually showed India displacing even Japan as the most favored market due to the perceived haven status during Trump's initial tariff rollout had happened. Because at that point in time, it seemed like the relations between US and India are at seen as the best among the others, and therefore we were hoping that we will get favorable tariff announcements, and 3 months on we see that we are actually being seen as one of the least favored ones, with 50% tariff being announced for India. How are you looking at this survey? What does that indicate in terms of how the global funds are finding their way to India and away from India, and what should an average retail investor pick out from this, sir?
Yeah, I think the first lesson that you should pick out is that we should not try to overestimate things that are beyond our control. Largely in terms of market parlance, what has happened is that in a lot of textile stocks also we saw a lot of build up, on expectations that we will have favorable tariffs. We were trying to, decipher geopolitics and government-related decisions, and we were trying to extrapolate and understand that what probably Mr. Trump would do. And I don't think that was an easy job for any one of us. And so I think, yeah, so first thing is do not try to extrapolate things that you have very little control, or possibly something that is not possible to be estimated with any kind of, any degree of correctness. So I think that was the one big problem. In terms of what has changed with respect to the FII's view, I think that's very normal. Even if I was sitting there, I would have also changed it, because the global whole dialect was very clear in favor of a very favorable India deal, that making us better in comparison to China, Taiwan, and the likes. What we have gotten is a very raw deal, and I think what is largely happening is it is largely regarding the USD protection that has taken center stage. If you look at the tariff, it's largely on BRICS, which is 50% and above, and rest of the world, it's not that steep. So I think dollar dominance is something he has started talking about very openly now. So that is one pain point that they have. So I think the whole objective of this tariff tantrum is to, continue the dominance of dollar and not lose that pole position, because that will hinder the whole debt situation, etc., very badly for them. So I think the whole thing is that they want to dominate that dollar position. That is why the BRICS, positioning is there. So I think not to read much into it. I think, yeah, temporarily, yes, certainly sentiment-wise, it is a negative for India as well as most BRICS nations. But as I said earlier, I'm expecting some resolution of it. Like in 2 months, we have gone from optimism to pessimism on this survey. In case something positive happens and some midway is found out regarding for these tariffs, etc., then these surveys would also convert the other way around. And it's a short time, 2 months, we have changed the whole view. So I think it was largely based on the speculative angle rather than a very long-term potential. So I think long-term potential does not change. Short-term hiccups, yeah, they are certainly there. So might be you will have some volatility over the next 1 or 2 months till this stabilizes. But again, I think the domestic cues are going to be very positive. So we might not see much of a correction on the domestic side also in case this continues.
If you like the video, do like, comment, share and subscribe.